Share capital. Exploring the fundamentals of share capital in business. Agenda. Introduction to share capital. Types of share capital. Issuance of shares. Valuation and pricing of shares. Legal and regulatory aspects. Impact on corporate structure and strategy. Definition and importance of share capital. Understanding share capital. Share capital is the amount invested by shareholders for ownership in a company, reflected through shares. Raising capital. Share capital is essential for businesses as it provides necessary funds to support growth and operational needs. Market confidence. A strong share capital base boosts market confidence, attracting more investors and fostering business stability. Components of share capital. Equity shares. Equity shares represent ownership in a company and grant shareholders voting rights and dividends. Preference shares. Preference shares provide shareholders with fixed dividends and priority over equity shares in asset liquidation. Capital structure. The overall capital structure of a firm includes a mix of equity and debt, impacting financial stability and growth. Role in corporate finance. Fundraising ability. Share capital significantly influences a company's ability to raise necessary funds for growth and operations. Risk management. Effective management of share capital is essential for minimizing financial risks and ensuring business longevity. Strategic objectives. Share capital is crucial for achieving a company's strategic objectives and overall financial planning. Financial leverage. The level of share capital directly affects a company's financial leverage and operational flexibility. Types of share capital. Authorized share capital. Definition of authorized capital. Authorized share capital is the maximum share capital of a company that it can issue as specified in its articles. Purpose of authorized capital. It serves as a limit on the number of shares a company can issue to raise funds from investors. Issued share capital. Definition of issued share capital. Issued share capital is the part of authorized capital that companies have issued to their shareholders. Impact on shareholders. It indicates the actual number of shares that have been sold to investors, impacting shareholder equity. Relation to authorized capital. Issued share capital is a subset of authorized capital, showing how much of it has been utilized. Paid up and called up share capital. Definition of paid up capital. Paid up share capital is the total amount paid by shareholders for shares issued to them by the company. Understanding called up capital. Called up share capital is the portion that shareholders are requested to pay for their shares, indicating financial commitment. Financial obligations. Understanding these concepts is vital for grasping a company's financial obligations and capital structure. Issuance of shares. Initial public offerings, IPOs. Definition of IPO. An IPO is when a private company sells its shares to the public for the first time, transitioning to a public entity. Funding generation. IPOs can generate significant funds for companies, enabling growth and expansion opportunities through public investment. Increased visibility. Going public through an IPO enhances a company's visibility in the markets, attracting investors and customers alike. Rights issues and bonus issues. Rights issues explained. The rights issue allows shareholders to buy additional shares at a discounted price, enhancing their investment. Understanding bonus issues. A bonus issue provides free shares to existing shareholders, rewarding their loyalty and commitment. Capital raising techniques, both rights and bonus issues, are crucial for companies to raise capital and incentivize investors. Factors influencing share price, company performance. A company's financial results, including revenue and profit margins, significantly impact its share price. Industry trends. Trends within a specific industry, such as innovation and competition, can influence investor perception and share prices. Economic conditions. Broader economic factors, including inflation rates and unemployment, play a crucial role in determining share prices. Market sentiment. Investor sentiment and market psychology can lead to fluctuations in share prices, regardless of underlying fundamentals. Methods of share valuation. Discounted cash flow, DCF. The DCF method estimates the value of an investment based on its expected future cash flows discounted back to present value. Price to earnings ratio, PE ratio. The PE ratio compares a company's current share price to its earnings per share, helping investors assess valuation relative to earnings. Net asset value, NAV. The NAV calculates a company's total assets minus its liabilities, providing a snapshot of its equity value for shareholders. Impact of market conditions, role of economic indicators. Economic indicators such as GDP and unemployment rates significantly impact share prices by reflecting the health of the economy. Geopolitical events. Geopolitical events can cause market volatility and affect investor confidence, leading to fluctuations in share prices. Investor sentiment. Investor sentiment, driven by news and trends, influences market dynamics and can lead to rapid changes in share value. Regulatory framework and compliance, share capital regulations. Share capital is governed by various regulations, including securities laws that companies must adhere to. Stock exchange regulations. Stock exchange regulations are critical for maintaining orderly markets and protecting investors' interests. Importance of compliance. Companies must comply with regulations to avoid legal issues and build trust with investors in the market. Shareholder rights and protections, voting rights. Shareholders have the right to vote on important corporate matters, influencing decisions that affect their investments. Dividends. Shareholders are entitled to receive dividends, which are distributions of a company's profits, providing a return on their investment. Access to information. Shareholders have the right to access essential company information, ensuring transparency and informed decision making. Corporate governance and disclosure requirements. Importance of transparency. Transparency in corporate governance ensures that stakeholders have access to relevant information, fostering trust and accountability. Building shareholder confidence. Adhering to governance standards helps companies build and maintain shareholder confidence, which is vital for investment and growth. Regulatory compliance. Companies must comply with disclosure requirements to avoid legal issues and maintain a good reputation in the market. Impact on corporate structure and strategy. Capital structure decisions. Definition of capital structure. Capital structure refers to the combination of debt and equity used for financing a company's operations and growth. Balancing risk and return. Effective capital structure decisions help balance the trade off between risk and expected returns for shareholders. Optimizing financial performance. An optimal capital structure enhances financial performance, making it crucial for sustainable business growth. Impact on control and ownership. Share issuance overview. The issuance of shares is a fundamental aspect of corporate finance that affects company ownership and control structures significantly. Dilution of ownership. Issuing new shares can dilute the ownership percentage of existing shareholders, impacting their control over the company. Consolidation of control. Alternatively, structured share issuance can consolidate control within a specific group, affecting decision making processes. Strategic financial planning. Importance of financial planning. Effective financial planning is essential for companies to leverage share capital and achieve their financial goals. Aligning strategies with objectives. Capital strategies should be aligned with business objectives to ensure sustainable growth and maximize shareholder value. Sustainable growth. Companies must focus on sustainable growth through sound financial planning and management of share capital. Conclusion. Importance of share capital. Share capital is essential for financing a company and influences its financial stability and growth potential. Legal implications. Understanding the legal implications of share capital is crucial for compliance and corporate governance. Strategic impact. The strategic management of share capital can significantly affect corporate decisions and overall business success. Thank you.